Before we get into today's video, I need to remind everyone to do your own due diligence. Please take it as entertainment only. I am not a financial advisor. Yeah, coincidence. Yeah, coincidence. Yeah, coincidence. Something that happens by chance, I think not. What's the crack, everyone? Welcome back to Buy Wholesale. I hope, of course, you are all well. An extra smile on my face today because the sun is gone and it is cloudy. I've never been so happy to see a bit of a dark cloud. Very, very hot these last 3 weeks. So, but pale Irish skin. The t-shirt tan though, coming on well. What do you think? Look at that bad boy. That's a real treat, absolute treat. So yeah, glad to get the t-shirt tan hopefully away again, guys. Don't cope well in the heat, but anyway, that's enough about weather. How boring was that way to start this video? But today's video is actually about something that's not boring. It's a very hot topic. We're talking about sort of Chinese stocks, and one stock in particular, New Oriental Education and Technology Group. Ticker symbol EDU. The reason I'm talking about this is because it's been in the news. Everyone's talking about these types of Chinese stocks and the reason behind it. But the reason I'm particularly picking this video is because if we go on to here, guys, you can see, we'll go on the trade and view the most active stocks. Look at this, guys. Huge, 806 million volume, guys. Strong sell, down 55%, guys. Brutal. We also have TAL Education Group, and everything I'm talking about today about this is very much applicable to TAL, very much in the same vein. Down 70%, guys. Hold on to your seats. The road is bumpy to Cape Town, and that is one hell of a gaping. No doubt about it. Strong sell on that. We've obviously got DIDI, and then we've got Alibaba, just to name a few of them, guys. And you know, what is going on in China? Well, this is the kind of thing that's happening. Crackdown on the education companies sparks sharp sell-off for Chinese stocks. This is being reported in the Financial Times. Ban on tutoring groups from making profit raises fears that no sector is safe from Beijing's regulatory assault. Most people should know China is obviously a communist state with communist government, and is corruption the right word? Maybe not, but it could be a bit dodgy, let's just say. So within that, guys, things like this can happen. One of my very first videos I ever did on this channel was about buying Alibaba, and I bought Alibaba and we did all right out of that trade. But we've also had a bit of a roller coaster because of the regulation issues that came out sort of in and around the Christmas time period. I sold out of that then, and the bad news, and then I bought back in because recently enough, actually, I bought back in maybe about 6 weeks ago. And the reason I bought in was because it was just too attractive as a price, and then all this nonsense has stopped up. So I've kind of been in and out of Chinese stocks, and I've had Neo and XPeng and stuff, but I've kind of put my hand in each time, and I've kind of balanced the ship okay, made a bit of profit, but I've also got my hand burned in the fire, and it's getting to the point now where I'm a wee bit sick and tired of Chinese stocks. The stock we're talking about today is New Oriental Education Technology Group, as I said, and pretty much their mission is to inspire Chinese students of all ages to improve their lives and expand their horizons through a lifelong commitment to learning by empowering students to achieve their potential, build self-confidence, develop a global vision, encompassing both traditional Chinese values and modern thinking. And they're committed to training a new generation of business and community leaders. So look, we could talk more about that there. We can go into the financial sector of this here, guys. If we go into the press releases here, we can see as of yesterday, guys, this article come out, and they're talking about providing updates on the new regulations. So, I mean, it goes down here, New Oriental is the largest provider of private educational services in China. So there's a lot of people on YouTube, particularly really backing this for a long-term hold. You know, it's just going to get bigger and better. And I feel sorry for those types of people that were invested in it, because I didn't know where this is taking a pounding. And I think it's a stark reminder that, you know, these kind of things can happen with Chinese stocks. Now, the only Chinese stocks that I currently have on my portfolio are Alibaba. I'm not huge exposed. I did pull out a bit of money about 2 weeks ago, but I've still got about in and around £300. I did have close to 1,000. And we'll talk about why I'm holding that a wee bit later. But you can see here, guys, this New Oriental Education update, guys, they're talking about, and the company will proactively seek guidance and cooperation with the government authorities in connection with its efforts to comply with the opinion and any related rules and regulation. And if we just go back to this article then, Global investors sold 2 billion of Chinese stocks on Monday as Beijing's crackdown on education companies raised fears of more regulatory tightening across the world's second biggest economy. So this change is huge. It's been in the talk. It's been happening for a long time. Even Trump was talking about issues with China and trade deals, and it's just all been going on and on and on. And now China and the crackdown, it's just crazy, guys. So you can see where there is fear. And when there's fear in the markets, you'll get sell-offs. Uncertainty, we know the market does not like it. And this is scary, guys. So they've banned it from making profits, raising capital, or going public. News of the measures, which was unveiled via a leaked memo, were later confirmed, wiped about 16 billion from the value of the 3 sector's biggest companies on Friday, guys. That's a big, huge sell-off. It doesn't say it there, but guys, it would be staring down. I mean, if the company can't make profit and can't, balance the books, and there's no real company there as such, in terms of making profit, they're going to get delisted, guys. That's the inevitable way it's going to go. Investors said the crackdown, which followed regulatory moves to rein in financial and technology companies, including ride-hailing app DIDI, which we've seen plenty in the news, and e-commerce Alibaba, raised concerns that no sector would avoid stringent policies. I will not read any more out on that, guys. If you just even type in EDU stock, it's just news article after news article about China crackdowns. Like I said, in the trading view, guys, it's all the Chinese stocks are the biggest traded volume. Just look at this chart, guys. It was a great stock, up, 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 up. It's had a bit of a pullback. These rumors have been going for a while, so in my opinion, especially with this type of company, you shouldn't be looking for the warning signs. Usually if there's smoke, there is a fire and all that. So, look at this drop. You can see it 55% of the day. Pre-market's down a further 25% today, guys, and this is brutal. So look, I'm not going to go into the stock. We're not going to look at the financials. It's completely, fundamentally huge change here to this stock and TRL and many of the other Chinese. There's a lot of fear out there. And I get that. To be honest with you, I'm doing this video just to say, stay the hell away from any Chinese stocks. They've always been volatile, but this is serious. You need to see exactly what happens. And there'll always be people on the other side of the coin that will say, great buying opportunity, this could... No. I would definitely be staying away from the education ones because that really looks serious. That does not read well. Other companies, the Neos, Alibabas, Xpangs, invest at your own risk. If I wasn't invested in Alibaba, I would be completely and utterly staying away from all of these. It's important to have diversity in your portfolio. That's a prime example. If you had all your money in either of those types of stocks that we've talked about, you effectively could have lost half your money in a day. Very scary thought, isn't it? Well, it's the same with brokers, guys. These new platforms, I'll keep telling you guys, these aren't long established platforms. These aren't like your Hargreaves and Lansdowne. These are cheap and cheerful apps that you could potentially lose a lot of money on if any of them were to go bust or whatever, guys. So bear that in mind, and I would recommend spreading your money across multiple brokers. I have about 6 now, and one of them is Free Trade, and down below you'll get a free share up to £200, guys. If that's not the one for you, do your own due diligence, find other apps, but that's a good one. Free commission, free share up to £200. You might as well check it out. So guys, the reason I'm keeping Alibaba is simple. I love Alibaba. They are one of the biggest companies in the world, never mind just China. E-commerce, they are right up there. And their cloud space is phenomenal. I really believe so much in the company, hence why I'm invested in it. Now, I have minimized my risk. As I said, when the news broke out a couple of weeks ago, I stripped out 60% of the money and left the rest just to see. And it has tanked. I am now in the red. That's full transparency. But my intentions is, hopefully all this will settle, maybe in a month, 2 months, whenever it may be. I will then double down and buy back into Alibaba. I think I'm willing to roll the dice, put it that way. I'm willing to roll the dice that there is a buying opportunity on the dip here. I would love to get your comments down below. Should I just be pulling out of everything? Are you pulling out of everything? For me, Alibaba is one that I really have done so much due diligence, and I love the company so much that all this China crap, once it gets sorted, the stocks, fundamentally, everything is fine. But there is a huge risk there. So again, it comes back to the old faithful thing I talk about in this channel, reward versus risk. And to me, I'm going to swing towards more the risky side of things and go, yeah, I think the reward could be quite good here. So that's my intentions. I might get burned, guys, but you know what? You only live once and all that good stuff. So look, that's the video. What's your thoughts on the Chinese situation? Are any of you invested in Chinese stocks? Are you as nervous? I am nervous about it all, but at the same time, I've minimized my risk. I'm prepared. If you have found this informative, please like, please subscribe, help me grow the channel. We're so close to monetization, baby. It's going to be a good day. And yeah, I'll catch you tomorrow, guys. Good video tomorrow on ABML coming your way. As you know, we love the battery metal stocks, guys. So make sure to hit subscribe button if you want to hear a wee bit about that. And until tomorrow, peace.
Yeah.
Coincidence.
Yeah.
Coincidence.
Something that happens by chance, I think not.